Hey guys, welcome back to another week of Mortgage Matters in Minutes. Again, I'm your host, Brent Rasmussen, owner of Mortgage Specialists. Again, we would love for you to subscribe to our weekly Mortgage Matters in Minutes, which gives basic, simple information in less than 10 minutes to answer any of your mortgage and some real estate questions. So today's question that gets posed to us nearly every day in this hot market is, my realtor told me to ask about a bridge loan. Okay, so what is that question really asking? It's stating, hey, you have a current house to sell and you want to buy another property. How do we get there? And most people are going to say, we don't want to move and sell our house, move to an apartment, and then wait for that transaction to occur and then buy our next house. They're looking for convenience, and that's what a bridge loan does. It looks for convenience of allowing you possibly to buy your next home using the equity of your current home. And so most people, obviously, when they own a house, they pay down their mortgage and they built up good equity, and they want to use that good equity for the next house. And that's what a bridge loan allows. It's a very simple terminology and it's a very simple loan. I think a lot of people think it can be complicated and there's lots of scenarios and discussions to have. But first of all, what is a bridge loan? Let's talk about that. All a bridge loan is a second mortgage on your current house that you own. So you have to own a property already to access a bridge loan. And we're just giving you a second mortgage, whether that's a home equity line of credit or a second mortgage loan. What that allows, that gives you that equity position or gives you that money so you can use the down payment on the next house. So that's how a bridge loan works. You basically look at taking out another mortgage on your current house, leave your current mortgage alone, take out a second mortgage. Now we give you $30,000, $50,000, $100,000 that you can use as a down payment on the next home. Generally, on many bridge loans, there's no payment due. It's interest only, and it gets paid off once you sell your house. So what's different about a true second mortgage versus a bridge loan is there's no prepayment penalty, and they might not ask for a minimum monthly payment on that bridge loan. But for qualifying purposes, we do have to count a payment. And so even though you might pull out $50,000, obviously that's attached as a loan to your house. So when you pay off your house, they're going to pay off that bridge loan. So what is the disadvantage? This sounds like a great idea. We see this happen all the time. And the negatives occur on bridge loans is you have to have great income, very low debt, and a very good credit score. Because bridge loans are a second mortgage, and second mortgages are riskier than a first mortgage is. And so in order to make a bridge loan happen, now you have to qualify with the new house with 3 payments. So let's talk about this as a scenario real quick. Say you do have very low debt, you have very good income and very good credit. You have a house to sell, it's worth $300,000. You only owe $100,000, and you want to buy a $500,000 house. Scenario looks great. Very good scenario with good income, good credit, assume the best. So let's say in your property, you have $200,000 of equity. We might be able to give you $150,000, $100,000. Let's make it easy, give you $100,000. You use that $100,000 to put down on that $500,000 house. Now for mortgage purposes, we need to calculate all 3 payments, your current first mortgage payment, an estimation of what the minimum payment would be on the second mortgage, and we have to calculate what your payment is going to be on the new property in order to qualify. Again, this isn't set by lending rules. This is set by our federal government of post-2008, stating every borrower must have the ability to repay. They must have the ability, the income to repay all of those loans in order to qualify. Generally speaking, what we see and what many other lenders see is the qualifying of that bridge loan can be challenging because not many people have enough income to afford 3 mortgage payments. And that's what gets a little challenging. Or if you are able to qualify for those, many of those types of clients might have a massive amount of savings or a retirement account or something else they can borrow against to not have to pay interest on the bridge loan themselves, and might just borrow against their own access of funds. So real quick in summary, let's kind of go through it again. A bridge loan is basically a second mortgage on your house that you own. And we're going to give you a partial amount of your equity. No one's going to borrow up to 100% of what your house is worth. They might borrow up to 80, maybe 90% of your house's value. Give you that money to put as a down payment on the new house. But the only negative occurs with the bridge loan is qualifying for all 3 payments. And that's where a mortgage lender needs to look at your income and your pay stubs and your tax returns possibly to see, do you have enough income to afford all 3 of those payments, plus your car payment, your credit card payments, your other debts as well. Because all mortgage loans have what's called a max debt to income ratio, where we take your income and we divide your debts by your income to get a percentage, and that generally is anywhere from 40 to 45%. So now that you've been a little bit educated about a bridge loan, understand what it is, you can definitely do the math yourself and find out, if you're looking at that $500,000 house, what's a payment on that scenario? What's my current payment? And then what's going to be an estimated minimum payment on a bridge loan, and see if all those payments can get within your 40 to 45% of your income. If it can, a bridge loan might be set up and great for you. If it can't, you might have to look at other options like a contingency of selling your house before you buy a new one, maybe accessing your own 401k funds, or maybe possibly getting a gift from a family member to use as a down payment on a new property. So again, I'm Brent Rasmussen. I appreciate you checking in with us here each and every week. We love to give correct and good education in simple 5 to 10 minute formats so that you can get yourself up to speed for the next time that you want to purchase your next home. Look forward to seeing you here next time, and have a great week. Mortgage Specialists. Driven, trusted, reliable.